Hello, everybody. Kirk Spano here. And as you can see, we were talking Ted Lasso and shrinking and Brett Goldstein and Harrison Ford off air. If none of those things mean anything to you, you should look them up. But this is one of the best interviews I've seen in a very long time. Brett Goldstein on the Colbert Show. Hilarious. Tells some amazing stories. Obviously, a little off script here for me, but, I invest in Warner Brothers and Paramount, and we've been in Comcast. I know the industry very well, how it works, where the money is, how the money works, where the fat is, what happens when the fat gets cut, how contracts work, the phasing out of stars, the phasing in of new stars. There really never is a shortage of talent, and that's why Hollywood is enduring. There's never a shortage of talent. There's always somebody hungry, looking to do more, looking to improve things, looking to be a star themselves. And sometimes you run into a guy like this, Goldstein, who you just go, wow, he's got it. He's nailing the humor. He's nailing just about everything. And, having those insights about those companies and understanding really how that machine works, right? There's a concept. How does the machine work? And whether it's the monetary machine, which we'll talk about today, or the Hollywood machine, or whatever machine it is, if you understand how the machine works, you can use it better. So, moving on. World Series of Poker. I am debating being in Las Vegas the entire month of June. I'm not sure if I'm going to do it. Right now, I'm scheduled to be out there from June 15th to July 1st, but I am kicking around, flying out on May 31st or June 1st, specifically to play in the Mystery Millions Bounty Tournament, which had 17,000 people in it last year. And I really want to play in this. My debate is, can I work enough if I stay out there for a month? And I think the answer is yes. The other question to ask is, will my future wife, who may be official come May, will she allow me to stay out there for a month? I don't think she'll have a problem with it. She said she won't have a problem with it. So I'm just getting over my own psychological hurdles at this point. But I may be out in Las Vegas for the entire month of June, in which case I would probably travel down to Los Angeles and Carlsbad. There's somebody I know in Carlsbad has a little bar, a mayoral candidate who's now just a big shot ex-tech guy that runs a bar. And if you'd like to meet me while I'm out there, I will give you those details when I know them. I should know them in April, maybe sooner. We'll see. Now, on to the main event, which is what I would like to play in July. But I have a rule, by the way, is if I don't make enough money during the June events, I don't play in the July events. And to date, I've never made enough in the June events to play in the July events, which the main event is $10,000. Last year, I made about 20 grand playing poker, but my target, my bogey, is I have to win. This is a number I've set up. If I don't make $30,000 in June, I don't buy in July for 10 grand. So I feel like I have to earn my way into the main event, and I haven't quite gotten there yet, but I think this might be the year. We'll see. So if I do end up being in Vegas for the entire month of June with a trip to LA and Southern California, I do hope that you find a way to come out and talk to me. I would set up probably at least 2 and if not 3 times to get together. Next, today's article, Macro Dashes. The Fed is fighting the last inflation war. I think that's a pretty good title. Hopefully people read it on Seeking Alpha. You have heard me talk about Austrian economists before. I hope some of you have looked up what that is and studied the different schools of economics. One of the heroes of American economics is a lad by the name of Milton Friedman. I think he was right on half of the things he said, maybe a little bit more. But he coined the phrase, inflation is always and everywhere a monetary phenomenon. And that was in an era when nobody really took demographics seriously. I think that in the era he was in, it made a lot of sense. But in the new era, where population growth is dramatically slowing and the aging of the population is dramatically increasing, monetary policy is not exclusively the driving force behind inflation. And people who hold on to that idea, they're not just a year or two behind the curve. They're really 25 years behind the curve, because the ideas about demographics driving the underlying economy have been around, I'd say 4 or 5 decades now. However, really got a push in the 1990s. I remember a guy named Harry Dent. Now, what we have going on, of course, if you've been following me a while, is slow growth forever. What is slow growth forever? Slow growth forever is the fact that the global economy is rapidly maturing, and it is much higher up on its S curve than it was 40, 50 years ago, the big boom after World War II, and then the Chinese miracle. What do we have next after China, which is suffering its own aging demographics issue? We have India, Southeast Asia, Eastern Europe is going to get rebuilt, and then ultimately Africa. So when you take a look at the numbers, the global economy is halfway up the S curve, maybe a little further. So we've seen that huge inflection point and the growth that has a curve that just keeps getting steeper. And we're just about at the inflection point. And that inflection point may have actually been way back during the financial crisis. But we're at the point where the growth curve is not as growthy. So the growth curve is starting to just bend back a little bit. Still going up, but much closer to the point where it really turns over than it was 20, 40, 60 years ago. One of the things I've talked about is how the green economy, which probably is necessary to fight off climate change, might be just a new invention within the economy to drive growth. So let's take a look at clean energy from two different directions. One is we need it, and the other one is we need it for something else. So do we need clean energy and cleaning up of industry to save the environment, or we just need it to drive the economy? Here's the answer. Who cares? As an investor, who cares? As a person, you should care. But as an investor, it doesn't matter. All you really have to do is follow the money as an investor, correct? All you have to do is take a look at what the big guys and the big industries and the big companies are doing with their money and try to get in on things at an opportune moment at the right price. So when you start thinking about clean energy, you don't need to have a dogma about it as an investor. If you want to have dogma about it because you believe in it that strong, that's fine. But what really matters to the investor is the money going into it, and what is it going to change in the future? We're going to end with a talk about Tesla's Investor Day yesterday and how it impacts things like inflation. So the old narrative was inflation is driven by monetary policy, and there is truth in that, but it is not exclusive of other things that impact inflation. So what is the narrative that we have been following for a year and a half that the rest of the world hasn't? What have I talked about over and over and over again since the autumn of 2021, a year and a half ago? I told you that inflation is transitory, but that the prices levels that we get to will essentially be permanent. So we're taking a step up in price levels right now, and it's almost over, actually. I have said that the transitory impact on inflation has been the shifting of supply chains, the change in globalization. Wrote an article about that way back in 2017, and energy today. Energy inflation, in fact, is the Federal Reserve's last war on inflation. We know the aging demographics are slowing down the economy slowly but surely. It'll take generations, right? It's not something that happens fast. To get through the second half of the S curve will take as long as it took to get through the first half. So 40 to 60 years. By the next century, who knows what's going on? But there won't be a lot of growth. The world will be a very sustainable place. We'll probably be on Mars, and we'll be exploring space. Remember what I told you. Star Trek First Contact was in 2062, a year after Halley's Comet, if I have that all right. Now, going back to the Hollywood thing we talked about a second ago, science fiction often is just a projection of the ideas about what the future could be, correct? Sometimes it's dystopian, sometimes it's very hopeful, sometimes it's in between, sometimes there's a multiverse of ideas. The multiverse is something that Star Trek explored, I believe, in 1999. I'd have to take a look at the different timelines that they created. But now it's in Marvel and in DC and all the other places that make entertainment. It's important to think about that because it helps us grasp what reality could become, how you can become a futurist. Think about the different directions that the world could take. And it is in our nature to be negative. But the reality is that since the Dark Ages, hundreds of years ago, the world has been getting better, choppy with setbacks, but generation over generation, getting better and better and better. Higher standards of living, less financial stress. We have the same problem of hoarding at the very top that it seems like we inch our way closer to finding a good solution to. All those things playing together. So if the last inflation war is energy, which is what I believe it is, what is the future of energy? Tesla talked about that yesterday. But what we know is that where monetary policy has had an impact is on housing and asset prices. And about a year ago, Federal Reserve presidents and former presidents were talking about how we needed a stock market correction and how we could engineer it. They came right out and told you, we're looking for a stock market correction. And it happened. The question is there one more leg down? And I think almost certainly there is, but we're getting closer and closer on the timeline to where the Fed pauses. And why will the Fed pause? It's because inflation will come down sufficiently and we'll move further down the timeline. Months will flip on the calendar that allow us to say, the supply chains have moved enough. Housing's come down. Stock markets come down. We're just fighting inflation that is being driven by OPEC, Russia, and China. And how close are we to not having to worry about them anymore? And I think the answer is pretty close. We know there's a massive inflection point coming in 2026 on energy. If you watched Investor Day from Tesla yesterday, you should have come away with that. I know that the focus of some investors out there, some people who were trying to generate a narrative, was that Tesla had to have a new product, a new vehicle. And I'll talk about that in a little while. It was a bullshit narrative, just like most of the narratives are bullshit. People talking their books or just talking about books they don't understand, like the one from John Maynard Keynes that you really should try to read. It's a hard read, but you should try to read it, or at least listen to the audible of it. So as the Fed keeps monetary policy tight, probably through later this year, I keep saying give or take a little bit, Labor Day. And I'll show you a calendar here in a second. I'll make you think that. We get past the summer drive season, past the escalation of the Ukrainian war by Russia, which I think it's a last-ditch effort. What you start coming away with is we're really close to getting over a dependence on oil. And that's different than using oil. We're very close to being over the dependence, right? The outright driving of the economy by oil, which has been going on for 60 years, maybe longer. For sure, since the early 70s when the United States cut the petrodollar deal with Saudi Arabia. And once we are over the outright dependence on oil, again, that doesn't mean we're going to stop using it overnight. It's going to take generations for oil and gas to be gone. But the growth curve is already flattened on those things, on those fuels. And pretty soon, there won't be a growth curve on oil. It'll be demand destruction. That'll be gradual. And during that gradual demand destruction, which probably starts late this decade, there'll be a number of years where people talk about, oh, this is temporary. They'll build it into another narrative. Oh, the baby boomer retirement crisis is what's driving the drop in oil demand, or this recession, or that event, whatever. 6 or 7 or 8 years from now, when people are talking about, oh, the demand destruction for oil is temporary, it's an event, not a trend. Remember this conversation. So when the demand destruction for oil begins, it'll be gradual at first until enough cars have been replaced with EVs and enough industries switch to hydrogen, which is going to be around 2030-ish and into the 2030s. So oil demand probably doesn't fall off a cliff until well into the 2030s, pushing 2040. However, investment markets will adjust well ahead of time because they'll see it coming. For the next year or two, and this is why we've bought Occidental and Permian Resources, Kinder Morgan, New Fortress Energy, all backdoor plays onto the next phase of energy, hydrogen, carbon capture, things like that, following the money because of the tax breaks that are out there and the way the technology is going on energy. Again, part of the Tesla conversation in a few minutes. What we can see is that energy inflation probably only has a 1 to 3 year window anymore. Depends on how much revenge spending there is out of China. It depends on what OPEC does for pumping. It depends on what Russia does in Ukraine and how much impact that has on the rest of the world. And it depends on what happens with Iran. If you read Foreign Affairs, the new issue, the one that I keep telling you to buy, subscribe to Foreign Affairs if you really want to know what's going on in the world. You saw an article that talked about the increasingly dangerous nature of what's going on between Israel and Iran. And it's important. I'll talk about that in another article. So energy inflation is the last boogeyman on inflation. Why? Because housing prices are coming down, stock prices are coming down, liquidity within the system is normalizing. Of course, it'll shoot through the roof again at some point. Eventually, liquidity goes up again, whether it's just to fight off a small recession, to juice an election, or to fight off the boomer bust that's coming. It'll happen. We know that as liquidity goes up, asset prices go up, and as liquidity comes down, asset prices come down. And we also know that liquidity and interest rates impact the value of the dollar in the markets, which drives where there's more growth and less growth. We know that naturally growth is coming from two places, emerging markets and the US. It's not really coming from China, Europe, or Japan anymore. It's India and the United States and Africa, Southeast Asia, a massive rebuild coming in Ukraine. The thing to think about with the Ukraine is if Russia is running short on money, probably be some blowback on Lil Vladdy, and the next leadership might try to make nice with the West. In which case, they probably want to send us a little bit more energy, a little bit more oil and gas, or at least send it to Europe as kind of a, hey, can we be part of the club? And someday Russia will be part of the club. Too many people there just want to be happy and secure, kind of like everywhere else. Eventually, the world gets better because Russia rejoins it. And eventually, the world gets better because China decides it's more important to be happy, healthy, and secure than it is to be a big shot. And they're going to be a big shot just because they have a lot of people. India will be too, and Russia. All these places that are fighting for hegemonic power right now will get over that eventually. Now, they might have to get their ass kicked a couple times because they don't have the gift of the geography and a century of building an empire that we have. People want to talk about the United States getting weaker. It's not. We're on a plateau, but we're going to be on this plateau for a really long time, generations. And then, of course, we get further up the S-curve on the economy. People all over the world are happy, healthy, and secure. That's been the theory behind American expansionism and globalism since World War II, since Harry Truman. Policy has been directed at giving people a loaf of bread and something in their pot. Because people who are happy, healthy, and secure, even if it's at an incremental level greater than where they were, are less likely to fight and cause big problems. So understand the way things have been set up. If you've never read a book called Counsel to the President, check that out. It's a great read. It's a thick book, but it's engrossing. Think about where are we going to be, not just in the next couple of years, next 2 years, but the next 10 years. And we talk about this 2-year versus 10-year outlook all the time because of how it ties into investor psychology. Investor psychology is always thinking about the next 2 years and often makes huge mistakes. When something that somebody says is going to happen in 2 years takes 10. What is a great example of that? Autonomous driving. We'll talk about Tesla in a minute. So the Fed is probably winning its war on inflation. One of the things to take a look at now is where the inflation rate will be in the fall. What have I said over and over again for over a year? Is that this autumn, 2023, inflation rate will be under 3%. That's what it's projecting out to be, according to the markets. Why does the index you use matter? Because one of them, CPI, housing makes up 33%. I would argue that the CPI is the more accurate measure of inflation, even though the Fed leans on PCE. I think they do that because it allows them to ignore the fact that housing is such a major component of what 98% of people spend their money on. So the CPI is probably much more important for 98% of the people, yet the Fed focuses on PCE, which is a little bit more important for the richest 2%. So who does the Fed work for? That little simple thing right there. What index do they look at for inflation should tell you who the Fed really works for. They don't work for the 98%. They work for the 2%. I know it's more common to talk about the 1% and the 99%, but really after you get past the top 1/3 of 1% richest people, from the 1/3 spot to about 2%, that group, 1 2/3%, which is where a lot of us are headed, we're already sniffing, is who controls the economy. Small business owners, executives, upper middle management, right? There's a term, upper middle management. That's a real term. Not just middle management, not upper management, but upper middle management. Maybe that's kind of like a B plus. I don't know. In any case, inflation is coming down. And the more that housing prices correct, the better that is for CPI. The PCE, however, will reflect that less because housing is only half. It's only about 17% in PCE calculations. So the way that you write the formula impacts the results, correct? Pretty standard. So inflation is coming down. The last boogeyman is energy. We have an election next year. I think Joe Biden certainly wants the stock market to do well next year, and really probably wants to do well into the holidays this year when everybody's together. So I don't see Armageddon. I don't see the Jeremy Grantham scenario playing out. Doesn't mean that it can't. But regardless of what the macro is over the next year, which is tough to predict because of the actors involved, president, other president, chairmans, whoever they are, the big shots. If you take a look at 2 and 10, 2 years out and 10 years out, it's a lot easier to predict the general direction of things than it is to say what the next trade is, which is why I say, unless you're a superstar trader, and you'll know if you are or you're not, right? If you're a good trader, you know you are because you're making more money. If your trades are iffy and you're not sure what's going on, and your balance sheet hasn't been increasing because you make incremental gains over and over again, then you're not a great trader, and that's fine. Being a great trader is a full-time gig almost. For most people, it is a full-time gig. I think you can pull it off in about 30 hours a week. But to the folks who only have a couple hours here and there, you can manage your portfolio and your asset allocation based on the 2 years and 10 years outlook pretty well. And you should be able to pretty easily beat the markets over full cycles. In a year or two, maybe not, but over a full cycle, if you don't dump when the scaredy cats dump, you held a little bit more cash on the way down so that you could get great prices and buy the companies that are going to have the growth in the future and the sectors and the industries, because certain sectors will never grow again, really, you're going to do well. So if inflation is getting under control and the last battle is energy, then what happens next? Probably get a rally. And in a few years, we're talking about deflation again. Now, you know that I don't always agree with the tree rings report. I just wanted to point out something here. Point number 10. Russia no longer has the economic means to wage offensive warfare. I've been telling you for a while that Russia's going to lose that war, that Lil Vladdy's going to go bye-bye. While there are clear dangers to one more spike in energy prices, it is also clear that we are on the cusp, regardless of what the next thing is, we are on the cusp of a series of things that are going to drive energy prices down. Russia being less aggressive and likely becoming nicer to the West at some point in the next several years is one of them. China expending their revenge spending over the next year or two is one of them. Getting back to normal, like is happening in the United States right now. Germany's practically in recession already, and so is Europe. So that's going to drive energy prices down. There's just not a lot. And we don't rely on Europe for growth, so what difference does that make to us? Right? People say, well, if Europe slows down, then the whole world slows down. Not really true. Pay more attention to India and the United States. If India and the United States slow down, big problems. Again, I occasionally will share this. Would love for you to subscribe, but it's expensive. It's $99 a month. So I'll share this when I think it's important. Think of it as an advertisement for him. Don't tell him. But great report. I don't always agree with it. I don't like the Austrian tilt. I think it's wrong. I think it's the wrong framework, even if sometimes it gets you to the right trade. Here's the Fed schedule. You have a meeting coming up in a few weeks. I expect them to be very, very hawkish. Doesn't mean stocks can't go up until then. But I expect this to be a very hawkish message. In this Wall Street Journal article that I showed you, I think it's today. Yeah, today's article. I wasn't sure it was yesterday. They talk about the messaging. So the Fed messaging is going to be difficult. I don't expect the pause until here. Doesn't mean it can't happen in June. But I think that they want to see housing prices and stock prices come down. And I know that they'd prefer that nothing gets broken. But I still think they want to see asset prices come down. They know that the high employment rates give them a lot of cover. And one of the things that's going to happen in here, one, you're going to have the debt ceiling fight, which won't be much of a fight. There's enough Republicans to pass what we need to pass, 20 or 30 of them. But we're going to start to get the numbers. I think the first one's May. I'm not sure when it is. But tax receipts are going to be really high. And next year, they're going to be higher, I think. With all these people employed, tax receipts have nowhere to go but up, especially with the IRS cracking down on millionaires and billionaires, different tax avoidance things, the 1% tax on buybacks. So I've told you before that at some point there's an inflection to balanced budgets just naturally, probably in the 2030s. Could be sooner if we stay at this full of employment and we allow immigration. Immigration could push us to a balanced budget really fast. And then what happens to the dollar? Even stronger. And then you got to find different ways of investing in emerging markets. Well, one of those ways would be through Bitcoin, because that is the natural hedge to the dollar now. It's being adopted enough that all these idiots on Twitter, which I've largely abandoned, who talk about Bitcoin maximalism and crypto and all this other shit, they're not really talking about the real reason Bitcoin is important, or the use-based cryptos like Ethereum and Ripple and Chainlink. You notice I only mentioned the same 4 or 5 over and over again. It's because almost everything else is going to zero. You see what's happening to Silvergate right now, falling off a cliff. We talked about that, 4 months ago, 5 months ago? That's why I bailed out of DAPP, switched over to a different fund that's had much better relative performance. All these things are coming to a head this year. More direction on crypto, more understanding of inflation by the market. And what Tesla talked about last night. Tesla essentially said that they're about 3 years away from helping to change the entire energy construct. What year would that make it? 24, 25, 26. 2026 again. We've been talking about 2026 since January of 2020. Again, going back to CES 2020, where it became apparent to me after talking with executives and engineers, tech people, that 2026 was a huge inflection year. And you can plus or minus it a year in the markets, right? Markets might be a little slow, markets might be a little fast. I'm guessing in this case, a little slow. But by later this decade, 26, 27, 28, when the statistics and the data start coming out on what's really going on, deflation is going to be a word again. And it's going to be because technology is driving a dramatic reduction in the costs of a lot of things, including energy. Energy is going to get cheap again. We are not past peak cheap energy. We're not past that yet. Energy is going to get cheaper than it was before because it's becoming easier to produce. Tesla talked about a replacement for rare earth metals. Kinda. I've known about this since late last year. There is another metal that on asteroids and meteors develops over millions of years. It's a different type of battery. Not a battery. Rare earth metals aren't really used in the batteries. Rare earth metals are used in the magnet-driven motors. So how are they going to replace the rare earths that they use in the motors right now? It's really 3 rare earths that are getting used, a ton of one, and a little bit of a couple others. This is the one that's going to be dramatically reduced, the neodymium. It's going to be replaced by something called, I have to look it up here because I don't always say the word right. Where is it? Tetraanite. This is what Elon Musk was talking about yesterday. Somebody asked about it in the chat room. Now, what's going to end up happening is that we're going to be able to produce cosmic magnets on Earth. They have figured out a way to make this stuff in a matter of minutes, cheaply. They have to figure out the manufacturing process, right? They have to scale up. But basically, they use nickel, iron, and phosphorus to make what's normally on meteorites literally in minutes instead of millions of years. And it's a permanent magnet. So this is the number that's going to come down. Somebody asked, is that bad for MP materials and the other rare earth metals producers? I don't think so. Here's why. Now they don't have to mine a bunch more shit. And that's really expensive. They can just focus on maintaining the production they have and producing magnets, however those chemistries end up working out. These are the two that they probably need to keep using, maybe not at 10 grams, but maybe at 1 or 2. What have we seen in solar? The price of solar has come down, over the last decade? 90%. 90%. So something that cost $10,000 a decade ago now costs $1,000. Has to do with the chemistry of the silicon and the non-silicon solar panels, the way the connections work, how we transmit the electricity, how we control it, the software, all those things working in tandem, or not even tandem, there's multiple things. Musk talked about the neural net that's in the Tesla car, the way that it thinks, the way the technology works together to solve problems and become more efficient and more powerful over time. Moore's law with semiconductors is an example. So these numbers probably never go to zero, but they come down 90%. And it's probably not going to take 10 years. It probably is going to take 3 or 4. So when Musk talked about not having a new vehicle to unveil yesterday, which was the narrative that a lot of the traders and people who were long Tesla wanted to hear, Musk refrained from hyping. If you watched that event, and it was a struggle for him to do it, and he clearly had a handler, that guy running the event yesterday was clearly Musk's handler, kept Musk under control. Said, look, let's buy ourselves some time. Stock price comes down 20 or 30%. There'll be plenty of dip buyers. And they basically announced they needed to get $75 billion. You're going to see Tesla succeed and fail at the same time. What they're going to succeed on is changing the world. And they have one decision to make about how profitable they are. If Musk focuses on really trying to get to 20 million vehicles sold per year, Tesla's in trouble. But if he can live with 8, 9 million, 10 million cars sold per year and have his cheapest car at $29,999, the so-called Model 2 that was speculated about, and really be the middle to upper end on EVs and just ignore the small cars, he's going to win. And that company will remain incredibly profitable, catering to the richest 20% of people on the planet. Kind of like Apple started out doing. Apple, Tesla. That's an interesting thought too, isn't it? So what would Tesla need to do to have a $29,999 car? They really don't have to do anything. So right now they have 2 platforms that they build their cars on. They have the platform for the Model 3 and the Model Y, and they have the platform for the Model X and the Model S. They don't really need more than those 2 platforms. And I guess they're going to have one for the pickup truck. But the Model X can be made a ton sportier, give it the characteristics of the Roadster, and just make it a hot car that sells for 80 grand, maybe 100 with all the bells and whistles. Model 3 and Y, which share the platform. I said X a second ago. I meant S. The S in sexy, right? The Tesla model spells sexy. S3XY, sexy. That's how we described it. So the Model S is going to take on the characteristics of the Roadster, and that's how they're going to refresh that. You haven't read that anywhere, have you? That's what's going to happen. You know why I know that's what's going to happen? Because that's what makes sense, and that's the most efficient thing to do. If you learned nothing about the company yesterday, you learned that there's a whole bunch of efficiency freaks in that company. Kind of wonder if Tesla's its own little country sometimes, right? A little bit of a devoutism there. With the Model 3, they can shrink by a couple inches at each end and on the sides, reduce the amount of weight, and they can pull out one more battery pack. And the battery packs are becoming cheaper and more efficient. So they don't need a new product. They simply have to make the Model 3 a little bit smaller, a little bit lighter, and a little bit more efficient, which is coming, to drop that price and let her 7-8 grand, which is what they need. So if the base model, without adding stuff and subscriptions, is $29,999, and then they leave it there. You buy that Model 3 because you just need a local car, and then you buy the subscription for the energy, $30 a month, and then you buy the subscription for the software and for your radio and whatever else. Now you've tacked on another $100 a month to your payment, but it doesn't feel that way. And it's forever, not just the length of the loan. Recurring revenue, subscription-based recurring revenue. We talk about that a lot too. The question for Tesla stock is at what price is it to buy? I have said somewhere between $40 and $80 a share. You'd have to be all over it. Not sure it gets under 100, but the chart seems to think it will. So now is a great time to watch the chart on Tesla, not just because you might want to buy Tesla, but because it's a big component in some of the clean energy ETFs. And they are very correlated, at least 2 of them are very correlated to Tesla. So if Tesla gets under 100, I'll be buying it. And if it stabilizes above that price, I'll probably just jump into the ETFs. And there's a possibility I do both. I buy the ETFs when the downward momentum here on Tesla ends, and I buy the stock if it happens to really hit bottom or near bottom or what I think the bottom should be, which is about $250 million valuation. We get a valuation on Tesla in the 200 millions, it's a buy. I don't know if it's 290 or 210, but between 2 and 300 million is a very good valuation for Tesla based on not just the cars, but the energy business and something that we talked about a couple of years ago, the insurance. What company do you know of that generates a ton of cash flow from insurance to finance the rest of their ventures? Just put out their annual letter. Some old guy in Omaha is the big shot. Yeah, Berkshire Hathaway. Do you know why Markel and Berkshire and some other hedge funds have insurance companies at their core? It's because of the recurring cash. Remember when I first started talking about me opening a hedge fund? I was like, I guess the ideal thing would be at its core to have some real estate and insurance holdings. And then you use that to buy the stocks for long term. Free ridership, subscriptions, cash flow, 2 years versus 10 years. As an investor, when you start to think that way, you will become a great investor. All right, let's call it a day. I'll get the pieces out and we will talk again on Monday.